What we are looking at here is a trade in CL. This is a trade 2875. This is a 2 by 1 Strangle that was put on May 9th. This is 32 days ago. And we can look back at what happened since we put this trade on. We're kind of just still drifting sideways. I thought we were potentially breaking out here. This was on May 28th. We got above 8 and 21 EMAs, and that was a false signal. We continued to roll over. This looked like we were breaking down underneath this kind of sideways channel that we built for about a month, and this now appears to be a false breakdown, so maybe some shorts get trapped here. Now we're pushing higher. Price is coming back up. We are above the 8, and now we're trying to take back the 21 EMA. I still think that this downward channel is going to resolve, and I think that if we are still in a uptrend, which appears to me that this uptrend is still intact, I think that once this short-term pattern that goes back to beginning of April resolves, I think the prices are probably going to auction to the upside. I could be wrong, but time will tell. In this trade here, we're looking at a 2 by 1. This is a 2 lot, so I have 4 naked puts at 60 strike. I have 2 naked calls at 96. This trade was put on with 98 DTE. This trade still has 66 days to go. But what I want to talk about is that we have reached almost 50% of max potential reward in this trade in only 30% of time, right? So we put this trade on at 98 DTE. 32 days have run off the clock. There are still 66 days to go. I sold this Strangle for 103, and now I could potentially look to buy this back. It's currently going for about 57 or 58 cents. So it's not exactly at 50%, but very close to it. So the question is, do I sit and wait until the exact 50% mark? I think, for me personally, I think this is a good practice to take some risk off, right? Because, again, looking back on the chart, and I don't want my decisions to be made only based on what the chart tells me. You know, if we do break out to the upside, yes, will I benefit in this trade? Potentially, right? I'm still holding about plus 105 delta in the CL contract, so any upside movement is going to benefit me. However, I am short Vega here, and what tends to happen is that when CL breaks out and everyone, and this is a quote-unquote everyone, who is short is trapped, they will reach for out-of-the-money options to protect themselves because they're caught off sides, right? Again, looking back at the chart, if, right, anyone got short here looking for a potential breakdown, and now in the last couple of days, we saw a pretty decent reversal and back into this balance area, anybody that got caught here will have to potentially either close out their positions or will have to buy upside risk to remove their underlying risk. So what's going to happen is when everyone goes chasing out of the money call premium, the skew is going to go way up, which means that the price of out of the money options is going to go way up, and that's not going to be fun for a trade that looks something like this. This trade is not anywhere near being in trouble. The point is that if we sit tight and wait for the last few nickels to drop, if, and that's in big if the underlying breaks out, right, we get blinded by, oh, well, I'm holding positive delta, so I'm definitely going to benefit from that. But that's not the case because there's still 66 days. There's a lot of time. And what happens is if the skew picks up, and we can look at the vol of CL contract, we often see implied volatility go way up when CL starts to move, whether it's up or down. And a lot of times we do see implied volatility spike when CL starts to rally. So it's kind of an inverse to what we're used to seeing in the equity or in index options. Anyways, the point is that in order to avoid or putting yourself in a position where you're not really getting anything in return for holding the risk, I think it only makes sense to either take out the trade at close to 50% target and save yourself 66 days of potential holding for hopefully more profit. You could reposition yourself, right? This one has 66 days. There's another contract with 99 days. So I think that would be a good move. Or maybe closing out 2 of the 4 naked puts at 60 strike, making this a balanced strangle. And this is what it would look like. Right, so now we're only holding about 19 delta. So this is pretty flat position, which means that if we go up, we're not going to make a ton more from the delta standpoint. If we go back down, we're definitely going to be in a much better position than holding 108 positive delta in this contract, where we would definitely give up about half of our theta here. So we would rely on just kind of a maybe slow move nowhere for the next maybe another 30 days. That's not a terrible idea, depending on everything else that you may have going on. But I think for me, it just makes sense to close out the position that I'm holding here. I'm just going to buy back the 460 naked puts, and I'm going to buy back 2 of the 96 naked calls, close to 50% target, and move on to the next trade. So this will be my trade. I'm going to try to get in somewhere around the mid price. Right now, the mid is somewhere between 56, 57, maybe 58 cents. And this is a debit, so I want to start off with maybe 55 cents, give it, maybe 10, 15 minutes to see if we get a fill. If not, I'll just raise the price by 1 penny until I get a order filled to close.